Executive Officer, Social Auditors Organization of the Institute of Cost Accountants of India, welcoming you to this knowledge sharing and learning webinar by Dr. K.K. Upadhyay on impact assessment of social projects. It's always our endeavor to bring to you the knowledge sharing sessions like this with a view to updating your knowledge as well as providing you the right wherewithal to take a step forward in this new emerging professional opportunity in the social sector. We are yet, all of us are new to this particular professional avenue, and thus we have a lot of things to learn, not only the theoretical things, which of course you can learn by reading books and other manuals, and also by appearing and passing the NISM exam, but the practical aspects can only be shared, explained by the experts who have had a hands-on experience with regard to these facets in their real life functioning. And it is our earnest effort to provide to you from time to time these kind of learning sessions so that we can all learn and upgrade our knowledge in this particular area. I take privilege and very, very huge pride to welcome the speaker of today, Dr. K.K. Upadhyay, and wish to introduce him briefly. He's a widely respected and seasoned development professional with over 4 decades of experience across government, not-for-profit, corporate, and academia. Dr. Upadhyay has pioneered several innovative social enterprises such as Safal. I mean, all of us go to Safal to buy fruits, vegetables, whatnot. He's the person who is behind that innovative social enterprise Safal for the government of India, Apni Yojana for KFW, German Development Bank, Bastar Integrated Development Program for the government of Denmark, and Health of Urban Poor for USAID. Dr. Upadhyay is a prominent certified trainer from Indian Institute of Corporate Affairs, SEBI, GIZ, and CBI, Netherlands. Sir, we welcome you to this session where we are learning from you, would like to expect to learn from you, from your perspective, rich experience in this social sector field. We want to learn from you the basics, at least the basics. I know the time is very short, just about 1 hour, 75-minute session, but then we at least would like to know the basics, the basic essentials of impact assessment in social sector. Thank you so much. Happy learning all the participants, and to inform you that we shall be conducting these kind of programs time and again. We have already lined up 3 programs in the coming week. On the 9th of May, again, we have a program, 12th of May, 13th of May, by different experts from the social sector. So please await further details. I'll be sending the flyer to all of you and look forward to your joining in our endeavor to learn from each other and build up our competence in the area of social sector development. Thank you so much. Over to Dr. Upadhyay, please.
Thank you, Dr. Sharma. As you said, it's basically a learning process. Yes. We keep on learning always. Absolutely. And especially in my profession, I started as a development professional from EDMA and worked with Dr. Varghese Kurian for Amul.
Yeah,
and then moved to development, corporate civil sector, then came to government, and then again went to corporates. I worked with JK Group, Boruca Group, and then after that I moved to academics. So I've seen all this in a way. So my effort today will be first to explain what is basically impact and why we are talking about impact. And then go into a little detail what impact measurement means in the current scenario, because of late it's a thing which everybody is talking. And anytime anybody has a question or a comment, you can just type it in the chat box. So I am always available, or you can unmute and ask a question. I just start my sharing. I just started again. Sorry. Share. Just give me 1 minute. Today, I'm going to talk about two things practically. I will limit myself to impact assessment and social projects. Two words, very important. One, impact assessment, and then social projects. As you all know, we have lot of projects and government keeps working in development. There was a study recently which I thought of sharing with you. India has been a country which in 1700 we had 34% of the world's trade. From 34%, by the time the Britishers came, it came almost to 14%. And when we got our freedom, about 8%. And in 1992, about 2% when we decided to open our economy during Shri Narasimha Rao's time, when Dr. Manmohan Singh was the finance minister. Why all this happened? This happened because there has been an adverse impactment of what we have been doing. Adverse impactment in terms of the development. If you see, income of India in 1900, as I told you, the time when Britishers were there, and after Corona, it was almost same. What is to be noticed is the gap between the income. We were there where we were at time of Britishers. Corona has impacted a lot. And if you see, the gap between the bottom and the top has increased a lot over some time. I quote Oxfam study, which says richest 1% own 53% of India's wealth. If you go to 10%, they own almost 76% of the wealth. Bottom 50% own hardly 5% of the wealth. And as I showed you in the previous slide, this gap has been increasing. During Corona time, rich became rich by almost 18%. This is not an Indian phenomena. It has been happening all over the world. Rich is becoming richer, and bottom poor is becoming poor. Note one thing here. I am talking about the UN standards, where I say $1.25 per day is my standard of poverty. And please note another thing. What is happening? The rich is becoming richer, but at the same time, the extreme poverty is going down. Extreme poverty all over the world has decreased. At time of independence, we were at almost 80% of our population was poor. Today, that has gone to, as per the latest statistics, to 25%. Percentage-wise, poverty has gone down in India, but the numbers are humongous. As you know, last week, we have become most populous country in the world. We have left behind now China. So what happens, even a small percentage is big in numbers here. Often people ask me when we debate, they say when rich is so rich, as the communist theory is there, take this assets from rich people and give it to the poor. So you can finish the poverty. But friends, that's not true. Where the money is, what I call resources which we haven't done. They are mostly with the companies. About 20.1 trillion, this is from US. Non-profit 1.2 and government what 3.1 trillion. If you see, most of the wealth is with companies. Some companies in some countries are richer than the country itself. Their turnover is more than the turnover of the company. Being a professor, a little bit of theory is my friend Elkington. He has been one of the pioneers in conceptualizing this theory of impact. He says, please remember three things. 3 P's: people, profit, and planet. To a lot of people, profit may be a bad word, but it's the magic word. That's how the world moves. In India, we have a lot of paradoxes. Like, we don't like to talk about business. But is the business which brings in revenue? Last year's budget, 15% of the government's earnings. Last to last year, about 20%, 21% of the government's earning comes from the corporate tax. Then they pay lot of taxes indirectly by the company for the services, by the employees, and by all the stakeholders who are affected by the company. Where this money is required. Why we are talking about this money? Why we are talking about impact? Because there are a lot of social issues, which at least government admitted they cannot tackle all of them by themselves. I have just listed 10 of them. There are plenty of them. Childcare, social equity, education, including community outreach, fighting poverty, senior care, healthcare, sports, plenty of issues which are to be addressed. Of late, we talk it in terms of environment, social, and economic. A word which is not topic today. I love to talk about that. That's ESG. Environment, social, and governance. We have a lot of issues in our country also, right from the world known Enron, where everything collapsed. About 20,000 employees lost their job and plenty of stakeholders lost their money. In India, the famous case of Satyam, which created, that's where we are talking about ESG. Another thing which we talk often is sustainable development goals, which After Millennium Development Goals, for 15 years, the world achieved about 50% of it. Then they were broadened, everybody was included, and they were called Sustainable Development Goals. Here, I have shown you Sustainable Development Goals, 17 of them, from 2015 to 2030, where we talk about reducing poverty, zero poverty. 13, we talk about environment. 4, we talk about education. Similarly, the last goal, 17th, we talk about partnership. Partnership means working with everybody, leaving no one behind. A true indicator of development is when everybody is at ease. They have a good life with all the basic facilities. India, Niti Aayog monitors them, all the state budgets, and even budgets of the corporates, they are prepared in accordance with Sustainable Development Goals. Why I am talking about all this? Here are two pictures. On the left, colony of rich people with a middle class, and then our Dharavi in Mumbai, where you have slums with high-rise building. That's what exactly I am talking about. I'm talking about rich on the one side and poor on the other side, and the gap between them. There's the basic difference. When we talk about US or Germany, this gap is less. Gap between the lifestyle. In India, when such a situation is there, we have rich people. There's India, I call it India, where we were the world champions. We sent Chandrayaan, and we have the best GDP at present in the world. Or rather, we are the only one, or one of them who has a positive one. Even a country like US has a 2%. And a lot of them have problems, especially our neighbors, whether it's Sri Lanka, Pakistan, Nepal, they all have problems. But at the same time, friends, remember one thing. We have another side of it that's called Bharat, where people face all sort of problems, right from education to the job. That's what at times we forget when we talk about India. I call it a divided nation. Sometime when we meet, I will love to talk about a lot about this, how, when, where, how we can solve it. I come from a business background. I teach business. My question to you, can we continue to do business as usual in societies that fail? If the societies fail, can we continue? The answer is straightforward no. All these companies, if we want to continue in case of all these problems, we cannot continue. That's where Government of India in its Union Budget 2023 talks about inclusive development achievements. Right from drinking water, Har Ghar Jal, to Ujjwala Yojana, what government is trying to do? Is trying to bridge that gap where people don't have basic facilities. If that's the case, can business be away? That's where lot of business, what we depend on business. For business, we depend on society. So, right from Jamshedji Tata, who as per study is #1 in the world when it comes to giving in terms of philanthropy. Right from Bill Gates to Warren Buffett, they give a lot of their money to society. Bill Gates has given his 50% of wealth for social development. Warren Buffett, 78% of his wealth. India is not lacking behind. Right from Tata's to Ajim Premji, Shiv Nadar of SCL, GM Rao of GMR, Ronnie Screwwala, Kiran Majumdar, all have given their wealth for philanthropy. So friends, remember 3 things. When I talk about social development, I am talking at this point about 3 actors. First and the foremost actor is government. Government, which has a duty. At one time, we used to call ourselves a social government. Social means we will take care of all our people, whether it's food, education, or health. And as you saw, especially I come from Delhi. In Delhi, just on these promises, a party won election. Not once, but twice. That's where the second one is the philanthropy. Like Ajim Premji donates almost 22 crores a day and almost 8,000 crores in a year. All of them, they donate the money and work with it. The third is Company Act 2023. As I told you, friends, for social development, we need money. And where the money is, I told you, it's practically with the corporates. You are involved with accounts, you understand how government runs. Part of money comes from corporate tax, income tax, where the most of the money comes. It's come from borrowing. That's where Company Act 2013 was a crucial when we talk about social development. When I talk about CSR, I'm talking about 4 things internationally. CSR means we take care of labor, environment, and human rights. There's a global principles for the business and human rights. As a signatory, we have to follow them. And then corporate governance, which means what is our board, how our board is made, how they do it. And in short, it means anti-corruption. That's where this 3 P's of John comes. And when we combine all these 3 P's, people, profit, and planet, that's what becomes sustainability. Broadly, when I talk to you about corporate social responsibility, what I am talking to you in general. I am talking to you, ensure employee welfare. You have to take care of your employees. Then engage with stakeholders. As Sharmaji was saying, let's work with everybody, let's work together. Similarly, as a business also, I have to take care of all my stakeholders. Right from my shareholders, who are important, to employees, government employees, our supply chain, to consumers. If consumers don't buy my product, how will I survive? And as a ethical organization, I have to promote human rights. Then last but not the least, support inclusive growth. Friends, that's what is 2% CSR when we talk about Company Act 2013. Broadly, I'm talking about employee welfare, stakeholders, and promote human rights. Then we are talking about support inclusive growth. That's where 2% comes in. For 2%, government has made it.
All the
Yes.
participants are requested to mute themselves, please. Thank
In
you.
Companies Act 2013. Companies Act 2013 has been a milestone, and clause 135, which was discussed the most, as for corporate social responsibility. It has 5 subclauses and a schedule 7. Schedule 7 draws boundaries, what we can do,
इसका
how we
012
can,
है नंबर
and what we can do.
एक 932
And India
845
was
की है
the first country.
All the participants are requested to kindly mute themselves, please. Thank you. Kindly mute your mic. Thank you.
Thank you very much. As you know, these are the 3 conditions. If your company falls in any one of them, you have to spend 2% on CSR. I won't spend time here. Is net profit 5 crore, turnover 1,000 crores, and a net worth of 500 crores. Either or, whichever condition is there. There have been, in 1920, 21,349 companies. They spend 2% on CSR. In 7 years, it has been more than 1 lakh crores, which is a lot of money. This is third thing which has come to social sector. Just 1 minute, there are a few chat boxes. Sir, is it any of the clauses? Well, yes. Yes. So more than 1 lakh crores has been spent on CSR in 7 years. Companies, they spend a lot of money. In FY21, and we call it social responsibility. Social responsibility of corporates. Infosys 362, Reliance around 1,000 crores, HUL 162, GAIL, L&T, Wipro, ITC, you name a company. And please remember other thing. Most of them have been spending for a lot of time. It was not only with most of these companies that they started spending after becoming a after the law. No. They were spending before also, and they were spending lot of money. Lot of people ask me question. Is CSR or in India 2% CSR related to profit? Yes. Profit is the magic word. But at the same time, lot of companies who make losses also spend a lot on CSR. You may ask me a question. Why to spend on CSR when you make a loss? It makes lot of good sense. Companies like Tata's, some of their companies, their units make loss, but they still spend on CSR because it gives you brand value. Schedule 7, as I said, from hunger to education to gender to benefit to armed forces, environment, rural sports, technology. And 9 is very interesting. If you don't want to do anything, give it to PM National Relief Fund. Then we keep on adding every time. Slum area development, disaster, Swachh Bharat, Clean Ganga, technology incubators, Corona related R&D for Corona. Why we are doing it? Me, it's very simple. CSR is a bridge. It's a bridge which connects society with the company. See on the right corner, I think society and business, they work together. We manufacture, we sell them, they buy, they fulfill their basic needs. That's where it's a bridge between what society expects and what society requires. As I told you, government is not able to provide all the things. That's where it was necessary that corporates chip in.
हेलो राम राम बेटा
Kindly
Society
mute
मैं घर पे
yourself.
हूँ बेटा राजा
All the participants are requested to mute themselves, please. Thank you. Kindly mute yourself. Thank you.
Society needs business. That's why we are talking about impact. Why society needs business? Because that's where business provides employment and wages, opportunity for investment. We invest in shares, dividends, and we get dividends and all. And then they get profit and taxes. Government gets taxes, people get profits. But at the same time, let's remember one thing, business also needs society. Because they need the demand where they can sell their products. They use public assets and infrastructure, like we are laying a lot of highways and all. That has done ease of business. And then they need the legal protection. Today, I'm not going deep into CSR, but CSR has to qualify for two things. One is legal and other is ethical. They must fulfill these two criteria. They are interdependent on business and society. For a few minutes, let's look back. Lot of money over the years has been spent on CSR, more and more every year. Most of the money has been spent in Maharashtra, Karnataka, Gujarat, Tamil Nadu, Odisha. Unfortunately, very little money has gone to Northeast, Bihar, and other states. That's where government is now talking about impact. They are talking about what they call aspirational districts, where development has reached less. So they want that these districts should also, 135 of them, should develop so as everybody is at the same level. We spend maximum education, then health, rural development, and environment. Please understand when I talk about impact, I am talking about impact of these activities. Education, health, rural development, environment, to culture, armed forces, people with disability. I'd like to share with you 4 things which happened in 2021. First, comply or pay penalty. Second, PM Care Fund. Third, amendments, and the changing landscape. Now, the CFO has to sign the CSR report. He has to certify that everything is okay, is as per the plan, and all the impact and all things have been achieved. It has been signed by CEO, chairman of CSR committee, and person identified. Just for your information, we have moved from national voluntary guidelines to national guidelines on responsible business conduct with 9 principles. And this way, any day if I talk to you about reporting, I will be talking about NGRBC, where the top 1,000 companies have to report now on a given format by the stock exchange. We started when, as part of FICCI, we were making these laws, we were talking about name or shame. A company should do, otherwise it comes in public domain. They are not doing anything for social development. That's called name or shame. Till 2019, it was comply or explain. You better follow the law, spend 2% of profit earned during last 3 financial years on CSR, report in public domain, or explain why you are not doing it. This theory did not work in India. We had problems with it. A lot of people started reporting. We could not recruit staff. We could not make project. We could not identify area. That's where come 2021 or now. At present, is either you comply or pay penalty. The whole ecosystem has changed. To me, as a CSR expert, I call it regulatory compliance. Now companies have to comply with lot of things. Just in very short, few things, they can have a multi-year project now for 3 years. If they spend a lot of money this year, they can offset in coming years, and they have to do impact assessment if they have a budget of 10 crores. Unspent funds have to put in a special account, and if not utilized within 6 months, transfer them to a government specified under Schedule 7 funds. And if non-compliance, they have to pay a penalty up to 1 crore, and each officer can be fined up to 2 lakh. 366 companies have been issued notices, and some of the companies have lost the case in court also, and they had to pay fine for that. That's where it becomes important to have an impact assessment. As per the law, CSR has to be done in a project mode. And so is true what others also, like if you have a NGO, if NGO spends on social projects, they also have to report, especially if you are an NGO and you have a FCRA, Foreign Contribution Regulation Act, then you have to report now on specified forms in a project mode. As you all know, friends, project mode means need-based assessment, baseline survey and study, then clearly identified frameworks, then financial allocation to them, and milestones what you will achieve when. Then clearly identified objectives and goals, and robust periodic review and monitoring. Now, they have to also do evaluation and assessment, but wherever possible by a third party. Of late, it's mandatory now to do impact assessment. If they spend 10 crores or more in the past 3 financial years, or their projects, individual projects are 1 crore or more, they have to get impact assessment done as a mandatory thing. If a project is, they can spend can exceed 20 lakhs or 2% of the CSR money. Just 1 minute, is there something in the chat? Sir, impact assessment is for spend above rupees 5 crore, I think, regards CMA Vidyut Kumar Basu. Mr. Basu, law is very clear. If we are talking about CSR, if 10 crore or project is 1 crore, you have to do impact assessment as a compliance now. How much you can spend on that? There have been recently a change. Earlier, it was up to 50 lakhs or 5%. Now it can exceed 50 lakhs and should be 2% of the CSR spends. I can cross-check definitely, but that's the law at present. Now, as a management specialist, we call it business responsibility. What we are talking about? We are talking about 3 Ps: planet, people, and profit. We are talking about environment, social and governance, and in short, we call it ESG. Of late, lot of studies and reporting comes in form of ESG. And that's what impact is all about. What we are doing with the environment, in the social and the governance. But when I talk about impact assessment of social projects, I am talking more about the people. The companies who do a lot of projects in the community, which is a major stakeholder, they have to work with that. And when we talk about social, we are talking about impact assessment. Just a small video, 2 minutes. What really impact assessment means? Here I'm talking about impact.
When we're laying on our deathbed, you're not going to worry about how much money you had, how much power you had, how much.
When you go
prestige.
from
You're
this
gonna see
world,
that was all game.
doesn't
That was
matter
all illusion.
how much power you have, how much money you have.
The only thing's going to matter is the impact you have on other people's lives.
Only thing that matters is impact.
We are all on a separate journey.
We have our own journey.
The beautiful thing about our life here on this earth is at my funeral, they're going to talk about my success. They're going to talk about who Nick was and
We
how
always talk about who you are,
and how Nick loved
but
and encouraged.
they talk about how you spent your life, what you have done with your life.
Success is even more important than success. Having an impact.
More important than
Knowing that
success
what
is
is
impact.
in vain.
What
Knowing
impact
that
you have
because
made on
you've
others'
been
life.
here, you've blessed lives.
That's what our
You've
dharma,
developed people.
our
You've helped
religions
people
talk
grow.
about. Making world a better place. The valuable currency,
Everything you do in life will work.
everything will fall apart.
All that you can do. What was in your heart?
At the end, it matters what was in your heart. People remember
Life is a mirror. Life
life is a mirror.
is
What you sow, you reap it. जो बोते हैं
When you were born, you
वही
could
काटते हैं.
live your life in such a way that when you die,
Live a life when you die,
don't cry
people cry
while you rejoice.
and you rejoice. That's a life, and that's what impact means. Impact is what you leave behind. When I do an education project, I improve education in the farmost area. That's what impact is all about. I worked with Amul. 80% of our sales goes toward the farmer. The farmer who pours milk in the village society. That's why Amul is able to meet two ends. The consumers get at a reasonable price, best quality product, and the producer gets good money for his milk. That's what we call impact. That's why Amul is a respected organization. And so are some of the Tata and Birla companies also. When we talk about impact, it can be positive and it can be negative also. It can be both ways. I talked to you about sustainable development goals, where we are talking as a world, as a company, about development and especially the social development of. That's where we make these treaties. We have a lot of development projects. We might measure our impact. Broad considerations on impact. It can be non-intentional also. Lot of times, what we do, it may not be intention that we want to create impact. But whatever we do, like tourism, we go for pilgrimage. हम लोग मंदिर जाते हैं, मस्जिद गुरुद्वारा जाते हैं, we go to Amritsar, we go to Kedarnath, we go to Ajmer. We are indirectly contributing to the local economy. The businessman there, the service providers, they get job from us. So our intention was not to work for their development. We had gone for a pilgrimage, but indirectly we are doing it. This is direct, indirect, positive or not negative, short term or long term. Like if you build a highway, the area dwells automatic. That's where lot of people had done, say in Gujarat, Maharashtra, and that's what we could not do initially in Bihar or Eastern UP. Then you have to measure it, and impact desired being analyzed or interpreted in data. When we do impact assessment, we collect data. It's not just the cause and effect relationship. It has multiple causes. I give you example. Lot of MPs, member of parliament, approach us in their constituency. They say, we have projects basically, but the money which government provides and others provide, that's not enough for meeting them. So as a company, a lot of times as a philanthropist, lot of times as a non-resident Indian, lot of times as an individual, they feel we should fill that gap. It can be multi-partners, multi-projects. How do we measure impact? Are we going for other 10 minutes? I just want to give you today what impact is, how it's measured, just a introduction to it. I won't be going to examples due to paucity of time, but what we call it is a theory of change. See, things change. What was yesterday is not today, and that won't be tomorrow. So things keep on changing. And when things keep on changing, we are going to measure it. Here, I'm talking about social projects. What technically we call development projects. How do I measure them? 6 steps basically. First, I engage the stakeholders. As I told you, it's a bridge of development, where this side, that side, in between, lot of stakeholders are involved. So I engage with stakeholders. Then I connect with the program design. Since it's in a project mode, so I have a design for it. What is my input, activities, output, and impact? Then I focus on the evaluation. I evaluate that project, how it is going, what has been done, then confirm resources and expectations. See, projects are run on expectations. We expect something from the projects. Then we collect data about the project. How many beneficiaries? I did a project on livelihood. How many people, what I provided, what has been the time, how it was done, what was the achievement, where we are at this stage, what has happened with these beneficiaries. So I first collect data and then assign values to what could happen. It's something like a share market. How much you invested, where you are today, When I talk about impact, I am also measuring what I can do in future also. That's technically called social return on investment. As in finances, you have return on investment. You are running a factory, you are running a business, a project. You want from me 10 crore rupees. My question to you, what return I get from those 10 crores? In business, we call it ROI, return on investment. On my investment, how much money I will get. In social projects, we call it social return on investment. Ambuja Cement, they work a lot on watershed projects. We had done a social return on investment, SROI study for them. In some of the projects, it was found that when we spend 1 rupee on the project, we get a benefits of almost 9 crores. And they used it in their advertisements, in their communication to all their stakeholders, in particular, their shareholders. You may ask me a question. Such things, why we have to talk about shareholders. Shareholders, because where we take all these reports, where we take these impact reports, we take them to annual general body meeting, AGM. And in AGM, we have to convince our shareholders about the money we are spending on social projects. That's why I measure impact and talk to my shareholders why they should allow me to keep spending on social projects and what benefit they get. Like I told in case of this company, so that's a cement company. For every 1 rupee spent on the watershed projects, earned 9 rupees. That means it's not only beneficial, but also it's a thing which is good to do. There's the 6th step, communication. In impact assessment, it's very important to communicate. Of late, we call this domain story writing. So through stories, we convey what good we have done. It can be done pre-project, during the project implementation, and post-project. Pre-project, we call it baseline study or need assessment, where we found what community needs, how much they need, why they need. During project implementation, I call it mid-term assessment. Through mid-term assessment gives me where I am in implementation of these projects. Then I can play with the design of the project and seek partnership where are required with other corporates, community, and the government. And post-project, what has been achieved? Now it's a compliance, so you have to get it done. Then also for benchmarking with your peers. See what other companies are doing. and what you are doing, you can benchmark it. You can find out what it is, how much it is, and it helps you in reporting and seeking money from your shareholders and at times other donors also. Why I call donors? Lot of companies like Airtel Foundation, they work with schools, with government schools, and also run their Satya Bharati schools. For the people who can't afford it, in the remote areas, now when they work with them, they get impact assessment done, they report it, result, lot of other companies, they work with them. They want to work with them. At present, about 50 of them. This gives a life, a boost to your project. Now you are not only spending your own money, you're getting money for the 50 corporates also. That's what impact, or what you used to call earlier, social return on investment studies, they help you. That's why learning about impact is very important. Here I'm just showing you a flow chart. First thing is understanding the project. As I told you, now social development we do through the social projects. So first and foremost, understanding the project. What are the objectives? Implementation framework. Then impact assessment objectives. So we understand the project. Then we use a sampling approach. We take samples. We can't go to everybody. Limitation is time and money. It costs. That's where we take sample. In time assessment, in time framework, and we get data and other informations like case studies, what has happened to people, how much has happened. Then we go to field and collect data. We call it data collection and analysis. After collecting data, we work with the data and then we do with that data and then we make the SORI or the impact assessment reports. Just going to chat. What's SROI? So see, as we do in terms of any investment, return on investment. In your company, I'm investing 10 crore rupees. What I will get out of it. Similarly, when we spend money on social projects, we are also interested what impact or what return we are getting in terms of social benefits from that money which we are giving. As I told you, it may be government, it may be personal, or it may be the company money. When we do ROI of social projects, that's what is social return on investment for that project. We had done recently for a carbon manufacturing company, and it came almost like 1.5%. For a company which is manufacturing carbon, spending money on the social development projects, even 1.25 return on social investment I call it investment. On social investment is very good. Then we share the draft report, finalize it, then we share with the shareholders. There's the process flow for the impact assessment. Then we also make data and others. (1.5% of profit). See, as per the law, one has to spend 2% of the profit of last 3 financial years on CSR. But when it comes to reporting an impact in terms of SROI, 1.5 means if I spent 1 crore rupees, the benefit to communities and stakeholders is of 1.5 crores. It's not in percentage, it's in 1.5. On what I call now social investment. What we spend on social investment, that's what it is all about. So I'll take care of my sound. Now, what is the relevance of these things? There's a framework. We call it SMART program. SMART means time bound. It has to be finished in time. It has to be specific with what we are trying to do. It has to be measurable. It has to be achievable, and it has to be relevant. Then what I'm looking for? Inclusiveness, relevance, expectations, convergence with other projects, and service delivery. What I have delivered. Let me see the chat. Yes, it's due to shortage of time, I won't be going into that. But whatever you spend and what type of benefits you get, put that into a formula and you get what type of benefits you have got. My point earlier was, it has not to be always positive. At times, it can be negative also. Impact has a relationship. First, let me go to chat. It should be women's what's I'm just giving example. When you talk about impact, it has a relationship with appraisal monitoring, evaluation, and then impact. I give you example. Organizational mission is poverty eradication. Organization mission is poverty eradication. Intervention is with the women's empowerment, making projects for women basically. This the example that organization wants to work with women, and they promote micro enterprises. I think half the slide has not come. They promote micro enterprises by forming groups, providing capital, and providing them livelihood. So impact has a relationship. First we do appraisal, evaluation, and then report impact. Impact at times becomes very important. The intent is to include more women. Yes. Lot of organizations, even corporates through NGOs, corporates through government projects, work a lot on women empowerment. It's in field of health, education, or of late, when we talk about startups, we are talking about what we used to call earlier the self-help groups. Now there is more in operation. Companies, basically not-for-profit company or a startup where we work with women in the best way. Any other question, please? Any question anytime? You can let me know. And let's have a break. I'll stop there. It's 5:15. Any minimum age people? It depends on a project. If it's an education project, say I am working with dropout students, boys and girls in a remote villages, then these are young boys and girls who could not go to school. But when I'm talking about self-help groups, I'm talking about 18 and above who are eligible for financial transactions through bank and others. And when I'm talking about livelihood, I'm talking about 14 and all. It depends on a project, local law and tradition, what is there. If no questions, I just stop here. Women and third type people are underprivileged and does not have equal with men. Yes? I would have shared with you, we have done for a carbon company, an impact assessment. We went there, collected data, focus group discussions, through sample survey, analyzed data, presented it to them, and that project is doing very well now. The third sex, that's of late, even there's a court case pending in the court, and government is talking about it. Poverty reduction and women empowerment are the impacts. Yes. As I told, it can be positive, it can be negative also. And it depends on the design of the project. Say, I started a project for poverty reduction. Now, through impact assessment, I am measuring, have I really reduced the poverty? Is it positive or negative? And how much? So I think I'll stop there.
Thank you so much, Dr. Upadhyay, for your very, very exclusive, very, very knowledgeable, educative session for all of us. Actually, this is a group of people who have now started looking at this sector very, very carefully in terms of professional opportunities by way of bringing into concept of social stock exchange by SEBI. They are professionals, they are chartered accountants, cost accountants, MBA, company secretaries, but now they are looking at this new opportunity of the social sector projects, and they don't really have much of an idea. So very, very good introduction given by you, but I'll connect with you and let's engage still more. Maybe we would like to have some kind of a case study from you on impact assessment next time, whenever it's possible for you. And also some of us don't really understand what SROI is. I mean, simple to understand, social return on investment, but how do you actually calculate it for a given project? That's where we would really like to have your session, brief session, whenever it's convenient for you. I'll get in touch with you. So on behalf of all the participants here and on behalf of ICMEI, Social Auditors Organization, and on my personal behalf, I hugely, immensely thank Dr. K.K. Upadhyay for sparing his very, very valuable time and sharing with us very, very educative and experience sharing in this particular session. So we look forward to having you with us in future sessions as well. We would like to keep you engaged with us in this common mutual journey of helping out the social sector and contributing to social sector development and making an impact on the economic development of the country during Amrit Kal, the next 25 years of India's political independence leading up to Amrit Kal, 100 years of independence in 2047. Thank you so much, all of you, for joining us here. Thank you so much.
Thanks a lot.
Thank you.
Enjoy.
Thank you.